Okay, very good morning. It's Tuesday the 9th of January. Hope everyone is well. So getting the briefing underway, we're going to talk about a couple of things. For one, we'll have a look at some of the Fed commentary from last night, which tended to err on the side of being a little bit more dovish. We'll see whether the markets reacted to that or not. We'll look at the situation with the cabinet reshuffle from Theresa May. We'll have a look at oil, which has seen a bit of a pop in prices from overnight and the reasons behind that. And then we'll look also a bit of a breakdown in some of the single stock news, because UK supermarkets have been lifted by signs of an upbeat Christmas trading period, which is obviously quite a key seasonal point of interest for that sector. So a few things to have a look at, and then we'll look at the day ahead is on the agenda. So looking at the charts at the moment, as I just mentioned, we did have some relatively dovish comments out of Fed members yesterday, but hasn't had a material impact on prices, because if anything, if you're looking at both major pairs this morning, so looking at the top left-hand corner, my euro-dollar and cable charts, both are trading in negative territory, each by around kind of 25 to 27 pips or so at the moment. So more reflection, I'd say, of dollar strength at this point. The Dixie, the dollar index that is trading up just shy of 0.2% at the moment. So consequently, gold a little lower, with equities still remaining fairly buoyant in sentiment. You can see here in my center right, the S&P in fact is just up, retesting yesterday's intraday highs. And of course, this is record high territory at this 2748.5 in the S&P. Just to round off with the US equity market, have some stats for you. So yesterday marked the 5th up day out of 5 so far this year for the S&P 500. Deutsche Bank with some statistics here. When the first 5 days of a year have been up, the average price return for the year is 13.44%, with a low of 2.03 to a high of over 20% when we've had in previous years gone by 5 consecutive up days to start a year. So it has been a kind of bullish signal in years gone by. Deutsche Bank's target, for those interested, in regards to the S&P, if you remember, we were talking about a street average at the end of last year was looking up at around 2850. Well, given the fact we've already got to 2750 and we're only on day 9 of the year, some of these banks are starting to revise that up a notch again. And actually, if we put this on a slightly longer time frame, Deutsche Bank are looking at, you guessed it, 3,000 end of year target. So that would be way up here, but certainly the way of which the kind of economic improvement story which is continuing to drive market expectations at the moment, that coupled with greater confidence among corporates about their future forward guidance, in addition to the corporate tax cut and other things that Trump will look to push forward in the short term to give the US economy an additional fiscal boost, and certainly these upside targets don't seem so unrealistic in that sense. So looking at this on a slightly tighter time frame or longer time frame, obviously at the beginning of 2017 we were trading around a 2200 level. Trump was obviously at the low point near to the 2000, so Deutsche are looking up at 3000 now as a year-end target, so continuing that aggressive trend of buying in US equity markets. As I said then, with that sentiment and the positive finish on Wall Street, gold is a little lower this morning in tandem with the slight dollar strength. I was just looking at the gold price this morning, as I know Jimmy was looking at this kind of this price action here on a trend line going back to Friday's session. And actually, Jimmy, I'm not sure whether you were, I know that you had posted this and shared it with us earlier in the live chat room, so I hope that you caught some of that move on the break eventually out of that kind of triangle price action, as we broke out of that on the test, which also came alongside the test of S1. The break of that has seen just a further extension to the downside, and we've just pushed testing around the low point that was seen in the aftermath of the payrolls print to find a bit of support. So I guess if you were looking at the short entry on the break there on that S1 and that trend line, taking some off the logical target as where we are at the moment, which was that Friday low. So quite a good opportunity there in gold in early trade, just given the moderate risk on appetite and seeing other assets. Okay, a quick look through then some of the news flow, and then we'll look at some of the associated charts. This was some of the commentary, and really, as I said, the dollar is shook off any dovish rhetoric from the Fed officials. There was 3 actually, in fact, in total last night. Going to have a look at this guy though, Bostic, because obviously we've started a brand new year, which means in terms of the composition of the Federal Open Market Committee, the FOMC, that now takes a new rotation, if you like, of members. And we'll have a look at that in a second, but Bostic's comments were quite interesting because he said that 3 rate hikes in 2018 may be too much. And obviously 3 is what the Fed have told us through their summary of economic projections of how many rate hikes they're going to do this year. There was a lot of talk at the back end of last year that 3 might become 4. Deutsche Bank, for one, if you'll remember in their research analysis, they were suggesting that actually they think there'll be 4 rate hikes. But this chap suggesting that possibly there could only be 2. A couple of things they're looking at is basically weak price pressures and other factors could mean fewer rate hikes, according to the Atlanta Fed president. So still not convinced by this relatively lackluster return of inflationary conditions. This is an updated kind of crib sheet for you. This is what the FOMC hawk-dove spectrum looks like now. And as I said, we've had a slight switch from 2017 to 2018 where the composition has tilted more to a hawkish stance. Keeping in mind as well that Janet Yellen, of course, is due to finish, as too is Dudley, and then Powell will overtake Yellen's position. But it does mean, though, is that the board going forward for the coming 12 months will have a slightly more hawkish tilt to it than we did and what we saw last year under the leadership of Janet Yellen, who's due to finish in February. Okay, a few other things. Just going back to the chart, I can see cables just testing a range kind of low that we printed in yesterday morning's session. That was also fairly close to the low print we had on Friday morning. So again, both Eurodollar and cable are lower, so more a byproduct of, I'd say, dollar strength than anything. But there was some commentary, of course, yesterday with the cabinet reshuffle. This is kind of the tone of which most press agencies are going with. Theresa May's cabinet reboot descends into chaos. I think that's a little bit sensationalist. I don't think it's quite as dramatic as chaos. But the point is that this kind of show of renewed confidence that Theresa May has, maybe not quite so punchy and a little bit more of kind of PR rather than anything significant to change the game in the major movers and shakers within the senior cabinet. So the Foreign Secretary Boris Johnson, the Brexit Secretary Dave Davis and Philip Hammond, the Chancellor, have all remained in their positions. So nothing on those top tier positions has changed. The only real ones that have are the Education Secretary Justine Greening has quit after the PM offered her an alternative role, and Jeremy Hunt, for all the negative press that at the moment the NHS has been under, has managed to persuade the PM to change her mind about moving his position, and he's maintained his place at the table, at least for the time being. So I wouldn't say that this is net feeding into sterling weakness. I think this is just more of a byproduct this morning of the fact that the cable pairs being pressured by a strengthening dollar more so. Oops. Let me just bring up my T-note chart back up. One currency pair though that has seen some movement from overnight that's probably worth sharing. If I just bring it into my screen and make it a little bit bigger, you probably would have recognized a pretty significant move in the Japanese yen last night. And this was it here. And it's not that we had a big risk-off session. It wasn't really a sentiment-based move, which often defines the reaction effect of the Japanese yen. This was more to do with the fact that the Bank of Japan made an announcement overnight. This is called Rinban, which some of you might not be familiar with. This is about their purchasing operations, kind of framework around their bond buying program. And essentially they've made a small tweak to its buying of longer dated debt. So they've actually stepped down the size of some of those purchases, which is in effect, I guess, would be akin to kind of tapering in the likes of what the ECB have been doing. And by no means is this a dramatic step in the same direction of the European Central Bank, but it may have caught a few investors by surprise, and as such it contributed to a form of tightening in a way, and generated yen strength, which consequently broke the previous day's lows, and that was seen in the pair around 112.50, and we snapped lower. However, as you can see, just given the relative risk appetite this morning, the yen has recovered, if you like. The strength, or the dollar yen has recovered, given some of the yen weakness now that these other markets have got underway in mainland Europe and the UK. It's kind of reflected elsewhere, with equities remaining slightly buoyant this morning. The DAX, Euro stocks in slight positive territory. Then consequently the US 10-year is already down about 5 ticks, you can see here down in the bottom right. So slightly weaker gold, weaker US 10-year, with equities remaining elevated at the moment, and some dollar strength is kind of the prevailing theme. One of the other things that we had was oil. Now, we talked about oil a little bit yesterday, and you might have seen our weekly strategy report that we issue every Monday, put together by Sam and myself, and we were looking at oil, and generally now we're looking at the case that there's the ability to open up further upside here, both from a technical and fundamental perspective. One of the things here is that we had rig counts in the US falling for the first time in 3 weeks, so any concerns, let's say, about ever increasing US output, it seems though the rig count, if anything, is plateauing at the moment. And then you've got this global economic growth story, optimism about the future going forward on the demand side, in addition to the ongoing supply situation, which of course is seeing OPEC and non-OPEC names continuing to cut a reasonable amount, and compliance levels remain relatively high at the moment. Looking technically then here at crude oil, if I start looking a little bit further back, let's put this on a, well, let's put it on a daily chart. You can see this current price points that we're testing puts us back at really this cluster of price activity at the highs that were seen around June, kind of May, June of 2015. So we've not been here in a long period of time, but if we can get our heads above here, then it really does open up some ground to further movement on the upside. So it definitely warrants watching at the moment in terms of crude oil at these current levels. One of the things you might have seen though, I'll put this back on a minute chart. When you came in this morning, you probably saw quite a sharp uptick that was seen overnight. And so what I typically do is I go back and I look at the charts on a minute candlestick, and you can see here this was at 11:37 p.m. last night. There was a pretty explosive move going from 62.05 and we spiked to 62.56. As far as I can see, there was no headline behind that move, so maybe a function of just market illiquidity at that point in the evening, an order going through the market, and again as a byproduct of that situation, just contributing to quite an aggressive pop at that particular time of day. Nothing more than that I can see, but certainly fits the directional trend that we've been in, which is still the view that we're going to remain supported in oil for the moment. Whether or not we'll push on from here, if anything, then looking at lower levels to join the trend to get long again is probably the preferred way of looking at the market at the moment. A couple of other things from a news perspective. Obviously, the markets are looking at this. In terms of the initial forecasts for the crude oil inventory numbers we'll get later on this week, initial forecasts are that we'll see a decline, so a drawdown of 3.75 million barrels. We've also had a couple of comments out of Iran as well that have caught a little bit of attention. The Iranian President Hassan Rouhani saying that anger that led to a week of anti-government protests exposed the need for freedoms he has championed. So nothing really too aggressive in nature from those comments, but just still drawing some attention to one of the larger OPEC producers, of course. Okay, a few other things. I know, Michael, you've managed to pepper the FTSE with a good trade this morning on the initial open, where we did see some upside. And one stock in particular I saw open up about 4.5% this morning was Morrison's. They reported that they enjoyed a near 3% boost in like-for-like sales over the Christmas period. Now, for any of those who monitor single stocks, or for those that don't, just for the benefit of your own kind of awareness, then this is one thing that a lot of people look at. This is basically Kantar, who are a company that compiles data from the grocery sector, and they issue reports from time to time in regard to the performance as a comparison as a sector, which is often something which can have a knock-on effect for an index like the FTSE, where you've got Tesco, Sainsbury's, Morrison's, all of which of course are FTSE 100 listed. But in summary, the Brits gorged on even more mince pies over the festive period, and Kantar reported record-breaking rush for UK grocers. So this is a quick look here at the performance this morning. So Morrison's, Sainsbury's, Marks and Spencer's have all shot higher. And so irrespective of this squeeze that we're aware of on consumers at the moment, that hasn't stopped us splashing out on food sales over this particular period. If anything, food sales have been robust. What has been weaker is that of clothing, for example. Okay, there was one other chart I just wanted to share with you, and just to round off the kind of news side of things. This was one I thought was quite interesting. This is basically an index that Bank of America Merrill Lynch create, and they look at various different numbers to contribute to this index. But it's looking at essentially a gauge of financial market stress, which by their measurement has fallen to a fresh low, which you'd have to go all the way back down to 2014. Now, I was reading quite just an interesting series of tweets last night, and they were talking about, when do you know with this equity run if we're getting anywhere near the top? Because obviously this becomes the question. I would say as a baseline, most banks remain pretty confident about 2018, that the way is going to be up in terms of US equities going forward. But obviously valuations, if they do become stretched, does ask the question, particularly in a monetary policy environment of tightening, really for the first time in regards to the ECB winding down, Bank of England potentially looking to move rates again, and most importantly the Fed with quantitative tightening and a series of rate hikes. So the point being is, one of these tweets that I was reading was suggestive that it's when the last bear turns bullish, you've hit the top. So the type of guy that constantly goes, it's overvalued, I'm shorting it, 25,000 now on the Dow, this has to be the top. As soon as that last bear flips and goes, do you know what, I'm wrong, we got to go long, that's the point then when the show's over, which I thought was just quite an interesting way of looking at it from a behavioural point of view. And are those final bears starting to flip now? It would be interesting to look at in terms of the CFTC's kind of speculative positions that they publish week to week in terms of market positioning, of which, on that matter, I think it was the market is as long euro, speculative positions in the euro in futures, that they've ever been since the inception of the euro at the moment, which brings about quite an interesting expectation here, this idea of continued European economic growth story, and with inflation starting to pick up, the market is very long euros at the moment in terms of market positioning, and certainly we have turned off the initial highs quite aggressively over the last week or so from that initial push at 121 and 121.50, because obviously if everyone is the most long they've ever been, if the market starts to come against them, then obviously you can see quite sharp pullbacks as people get stopped out of that trade. So it's just something to consider. Alright, quick look at the calendar. Let's see what's on the agenda for today's session. And starting off with this morning, you've had a couple of data points already. So German industrial output 3.4%. That was above the expected 1.9%. Exports 4.1 above 1.2. Imports 2.3 against 0.8. So very strong data there out of Germany. Keeping an eye on the DAX, of course, this morning, because we're already up, looking to have a retest close in toward the highs from yesterday. So that would come just short of the R1 on the daily pivots, so around that 13,413 level. Otherwise, looking further forward, it's pretty quiet overall today, and as I was discussing in yesterday's briefing, this is very much a byproduct of the fact that in terms of the scheduled events for the week, it really is Friday, which is the US CPI and retail sales day, which is the biggest event. But looking out for this afternoon, you have things like NFB or NFIB Business Optimism Index. That rarely moves the market. Same case really goes for JOLTS, the discount minutes from the Fed and Redbook. So not really too much. So I'd be looking for identifying solid technical trends in the market and levels, trying to read sentiment on the back of maybe some of this at the moment, which is mildly positive. So just keeping half an eye on the likes of the yen, gold and T-notes to see whether or not that can continue, and whether we can continue this push higher in the US equity market, predominantly with the bigger bulk of the volume coming through in the afternoon session. Speaker-wise, you do have Kashkari speaking later, and you'll remember Kashkari. He was obviously famous for 2017 as being the outlying kind of dove, the Uber dove. But Kashkari, don't forget, is no longer a voting member now on the FOMC. So what I'll do is I'll share in the chat room with you guys this latest crib sheet of all the members, so that you need to get swatted up with who are now your voting members, so therefore net the most influential when they speak on the tape. Your most hawkish at the moment now is Mester, excuse me, and Brainard is the most dovish at this present point. Okay, that's it for your briefing for this morning. So coming up to 9 o'clock, wish you a good day, good luck out there, and I'll see you in the chat room. Thank you very much.